Welcome to the Deep Dive. Today we're jumping into Amazon's first quarter 2025 earnings.
Yep, got the call transcript, the financials right here.
And we've also got a Seeking Alpha piece looking back at Q4, which kind of sets the scene for this Q1 stuff.
Right, it helps connect the dots.
So our mission today is basically to cut through all the numbers and jargon. We want to pull out what really matters about Amazon's health, their big bets on AI and AWS.
And especially that whole GPU situation. That's a big one people are watching.
Exactly. Are they going all in on their own chips, or is Nvidia still a major part of the picture? We'll unpack that for you.
Absolutely. It's a critical time to understand where they stand, with AI just exploding. We'll give you the key takeaways without you needing to sift through everything yourself.
Okay, let's kick off with the big picture then. Q1 2025 financials. What are the headline numbers telling us?
Well, the top line looks pretty solid. Revenue came in at $155.7 billion.
Wow. And how do they compare year over year?
That's up 10% compared to last year. And it's still 10% even if you take out currency effects. Plus, they beat the analyst forecasts.
Okay, beating expectations is always good.
Yeah.
But what about profitability? Was it just revenue growth?
No, definitely not. Operating income saw a really nice jump, $18.4 billion.
That sounds significant.
It is. That's up 20% year over year. And it was actually higher than their own predictions, their own guidance.
4% jump, okay. And net income.
Net income was also strong, $17.1 billion. Now, it's worth noting that figure includes a $3.3 billion pre-tax gain.
Oh, right, from that Anthropic investment.
Exactly. So that boosted the number, but still, strong performance overall. That investment seems to be paying off already.
Seems like it. Okay, what about cash? How's their free cash flow?
Their trailing 12-month free cash flow is sitting at $25.9 billion.
That's a solid number.
Yeah, it really shows their financial strength, the cash they have left after all their big investments.
So financially, a pretty positive start to 2025. Let's break it down a bit by segment. How did North America do? That's their home turf.
Right. North America brought in $92.9 billion in revenue, up 8%. Operating income was $5.8 billion.
Which gives a margin of?
About 6.3%. But the CFO, Brian Olsowski, did mention there were some one-off charges in there that kind of temporarily pulled that margin down a bit.
Okay, good context. And internationally?
International revenue was $33.5 billion, also up 8% if you strip out the currency exchange impact.
From the profit picture there.
A bit tighter.
Yeah.
$1 billion in operating income, so that's a 3% margin. And again, they mentioned those same one-time charges affected the international results too.
Got it. So retail growing steadily, but with some margin noise. Now let's get to AWS. Amazon Web Services, that's the engine, right?
No, absolutely. AWS continues to be a powerhouse. Revenue hit $29.3 billion.
And the growth rate there?
A very strong 17% year-over-year increase. Operating income was huge, $11.5 billion.
$11.5 billion from AWS alone.
Yeah. And they pointed out it's now running at an annualized revenue rate of $117 billion. Just massive scale.
That's incredible. And AI is obviously the hot topic. How's that feeding into AWS?
Well, they specifically mention growth in both generative AI services and, the more traditional non-gen AI stuff too. It's boosting demand.
But are they expecting margins to stay that high with all the AI investment needed?
Good question. They actually signaled that we should expect AWS operating margins to fluctuate a bit. They're investing very heavily in AI right now.
Makes sense. Yeah, it's been big to stay ahead in AI.
It's definitely an investment phase for future growth there.
Okay. Beyond the segment specifics, what else did they highlight as key growth drivers or big strategic moves?
Well, the core online stores are still performing well. They put that down to selection, price, and importantly, shipping speed. They mentioned record delivery speeds for Prime members.
Disaster boxes, people like that.
Apparently so. And growth in everyday essentials, too. Also, their advertising business is just continuing its strong run.
All right, ads seem to be a consistent winner for them. What were the numbers?
Amazon ads pulled in $13.9 billion. That's up 19% year over year. Just really solid growth across the board for their ad offerings.
19% is impressive.
And of course, AWS is still seen as the massive long-term growth engine. They threw out that stat again. Over 85% of global IT spending is still on-premise, not in the cloud.
85%. That really hammers home the potential runway they still see.
Huge opportunity. They also emphasize AI across the whole company, not just AWS, mentioned over 1,000 AI applications being worked on.
1,000, wow. Like What?
Well, the next-gen Alexa, they're calling it Alexa Plus A, and cost reduction is still a big focus, optimizing fulfillment, more robotics, automation.
And that Kuiper satellite project. Any news?
Yep. First satellite launched successfully. They expect to start offering service later this year, so that's moving forward too.
What's going on?
Okay, let's zoom right in on the AI infrastructure piece, specifically the GPUs. This is what a lot of people listening probably want to know. The big question, is Amazon just using its own silicon now, like Trainium, or are they still using Nvidia?
Right, this is super interesting. The short answer is they're doing both. It's a dual strategy.
Okay, so not just their own chips then.
Definitely not exclusively. They are facing massive demand for AI compute capacity, so they're tackling it from two angles. They explicitly mention bringing online more P5 instances.
Which are Nvidia-based, right?
Exactly. P5s use Nvidia GPUs. But at the same time, they are heavily investing in and deploying their own custom silicon, especially Trainium 2. They're pushing hard on that front as well.
So it's Nvidia and their own custom stuff. A hybrid approach, why do both?
Choice and likely performance characteristics. Andy Jassy talked about Trainium 2 offering significantly better price performance.
How much better?
He claimed 30% to 40% better price performance compared to other GPU instances. That's a big deal for customers running AI models at scale, where cost is a huge factor.
30 to 40%.
Yeah,
Yeah, that would definitely make Trainium attractive for certain workloads.
for sure. It gives customers an option, especially if they're cost-sensitive or doing massive training runs.
And what about the software side? How are they enabling AI on this hardware?
The main platform there is Amazon Bedrock. Think of it like a managed service or marketplace for foundation models.
So you can choose different AI models.
Yeah, exactly. They offer models from Anthropic, like Kuiper, Meta's, Llama, others like DeepSeek and Mistral AI, plus their own Amazon Nova models. It gives users flexibility.
Like an AI model buffet.
Kinda, yeah. Pick the brain that fits your job best. And they're also moving beyond just models that answer questions.
Oh, what do you mean?
They talked about developing action-oriented AI agents, things like the new Alexa Plus and something called Amazon Nova Act.
Action-oriented, so AI that does things.
Precisely. The idea is to move past just Q&A to AI that can actually perform tasks, maybe multi-step tasks, autonomously. They even showed a preview of Nova Act working within a web browser.
Interesting. So AI assistants that are more proactive.
That seems to be the direction, more integrated into actually getting things done.
And are they continuing to develop their own silicon beyond Trainium 2?
Oh, yeah. Back in the Q4 call, they mentioned Trainium 3 and even Trainium 4 were already in development. So this is a long-term strategic commitment for them. Custom silicon is key to their differentiation strategy.
Makes sense. Now, we keep hearing about supply chain bottlenecks for chips and components. Did Amazon mention facing any of that?
They did acknowledge it. Jassy said they are seeing some constraints right now, things like motherboards, other components needed for the servers.
Uh-oh. Is that slowing them down?
Well, it's a factor, but they expect the situation to get better throughout 2025. It's an industry-wide issue, really.
Yeah. And all this hardware, the Nvidia chips, their own Trainium chips, it must cost a fortune. What's their capital expenditure look like?
Huge. CapEx in Q1 was $24.3 billion.
$24 billion in one quarter.
Yep. And they stated the majority of that went straight into technology infrastructure, building out data centers, servers, supporting AWS and all these AI services, including manufacturing their custom chips.
That's a massive bet on the future of cloud and AI.
Absolutely. It shows you where their priorities lie.
So just to circle back and be crystal clear on the GPU question, when analysts asked directly on the call, what did Jassy say about Nvidia versus Trainium usage right now?
He was quite direct. He said, and I'm quoting roughly here, that they are bringing on a lot more P5s, which is a form of NVIDIA chip instances, as well as landing more and more Trainium 2 instances as fast as we can.
Okay, so explicitly confirming both are being scaled up rapidly.
Unequivocally. They offer NVIDIA, they offer their own Trainium. Customers get the choice depending on their needs, performance requirements, and probably budget.
That clarifies it perfectly. Thanks. Okay, let's look ahead. What did Amazon forecast for the next quarter, Q2 2025?
For Q2, they're guiding net sales between $159 billion and $164 billion.
Another big number. Any currency headwinds expected?
A small one, yeah. About 10 basis points, they estimate. pretty minor.
And profitability for Q2?
They're projecting operating income somewhere between $13 billion and $17.5 billion.
That range seems a bit lower than Q1's $18.4 billion.
Right, but the CFO explained that. It includes the usual seasonal bump in stock-based compensation that hits in Q2, plus some initial costs tied to launching Project Kuiper.
Ah, okay, so accounting for those factors. Got it. One last thing, any talk about trade tariffs or geopolitical risks? That seems to be a constant background worry.
They touched on it, acknowledged the uncertainty around potential future tariffs, for sure.
But what are they doing about it?
Their main line is that they're focused on keeping selection broad and prices low for customers. But pragmatically, they mentioned some forward buying of inventory, both by Amazon itself and by third-party sellers using their platform.
Stocking up just in case.
Seems like it. And longer term, they pointed out they've spent the last 6 years or so diversifying where they source components for AWS and their devices, spreading production locations around.
Smart move, hedging their bets.
Yeah, trying to build resilience into the supply chain.
Okay, so let's wrap this up. If you had to distill it down, what are the absolute key takeaways from this Amazon Q1 deep dive?
I'd say number one, Amazon's in really strong financial shape. Revenue and operating income growth are robust. Driven significantly by AWS and that booming advertising business. Those two are really carrying a lot of weight. Number two, their investment in AI is massive and strategic.
And the key part of that strategy.
That dual approach to infrastructure, they're not putting all their eggs in one basket. They're aggressively pushing their own Trainium silicon for price performance, but also scaling up Nvidia GPUs like the P5 to meet demand and offer choice. It's pragmatic.
So despite some supply chain hiccups, the overall outlook is pretty bullish.
Very much so. The long-term vision for cloud and AI seems incredibly optimistic from their perspective.
And for you, the listener, thinking about all this, what are the really crucial insights to take away?
I think that focus on price performance with Trainium is key. It signals Amazon's intent to make powerful AI more accessible, or at least more cost-effective at scale, which could really shake things up. Offering that alongside Nvidia gives them broad appeal.
Right, catering to different needs.
Exactly. And don't sleep on those action-oriented AI agents like Alexa Plus and Nova Act. That hints at a pretty significant shift in how we might interact with AI, soon moving beyond just asking questions to having AI actually do complex things for us.
Okay, so here's something to ponder then. Given Amazon's sheer scale and this dual strategy investing heavily in both their own custom chips and established players like Nvidia, how is that going to ripple through the whole AI infrastructure market? Will it make advanced AI compute more accessible or just consolidate power?
That's the multi-billion-dollar question, isn't it?
Yeah. And maybe more personally, as these AI agents get smarter and more capable of taking action, what are the unexpected aha moments or changes to our daily routines that might emerge? Things we probably can't even really imagine right now.
Definitely food for thought.
Thanks for joining us for this deep dive.